Minda Corporation Limited Q3FY22 earnings conference call hosted by KR Choksey Research. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Ms. Parvati Rai. Thank you, and over to you, ma'am.
Thank you, Faizan. On behalf of KR Choksey Research, I welcome you all for the Q3 FY22 earnings conference call of Minda Corporation Limited. From the management side, we have Mr. Ashok Minda, Chairman and Group CEO, Mr. Akash Minda, Executive Director, Finance and Strategy, Mr. Neeraj Mahajan, Group President, Marketing, Mr. Vinod Raheja, Group CFO, Mr. Sanjay Gupta, Deputy CFO, and Mr. Vikash Dugar, Lead Treasury and Investor Relations. Now I hand over the call to Mr. Akash Minda from the management for their remarks on the result, and then we will have a Q&A session. Thank you, and over to you.
Good evening, everybody. Thank you so much, Parvati, and thanks a lot, KR Choksey, for holding this quarter conference call. I may request Mr. Ashok Minda to give us the opening remarks, please.
Thank you, Akash. Good evening, everyone, and welcome to the Quarter 3 Financial Year 22 earnings conference call of Minda Corporation. I would like to thank you all for joining us on this conference call here today, and hope you and your loved ones are staying safe and healthy. In the third quarter of financial year 2022, the auto industry continues to deal with challenges in the supply chain, threat from the COVID waves, along with overall subdued sentiments. This had a broad impact on all the vehicle segments and vehicle categories. During the same period, Minda Corporation continued its momentum of outperforming both on a year-on-year basis as well as on a quarter-on-quarter basis. The company consolidated revenue stood at rupees 7,383 million with an EBITDA margin of 10.7%. This is in line with our commitment of delivering consistent and improved performance. In line of the current performance, Board of Directors has announced an interim dividend of 15% on face values, which is 30 paisa per share for shareholders. I would also like to appraise our stakeholders about some of the key development during the quarter. First was the successful closure of the financial transaction of Minda Stoneridge, which made it a 100% subsidiary of Minda Corporation effective from 1st of January. I am happy to share that the technological collaboration with our long-standing partner Stoneridge Inc. from the US will be further strengthened in new technological product. Secondly, Minda Corporation has filed the application for production-linked incentive scheme with the authorities and will be utilizing this opportunity to develop advanced technological products. I am also pleased to announce that the company electric vehicle segment has added 2 new customers, BMW and Hero Electric. We also won lifetime order in quarter 3 worth rupees 16,516 million from both ICE and EV segment for all our products. We have further strengthened our leadership by welcoming Mr. Vinod Raheja as Group Chief Financial Officer. His steady leadership and vast experience will further help us in creating value for all stakeholders. He will be instrumental in strategic finance, strengthening controls, and robust governance. Looking ahead, the industry outlook in near terms will be determined by the ongoing Omicron wave, improvement in semiconductor supplies, and overall customer sentiments. However, we expect to continue our consistent growth strategy by strengthening the core business and diversifying a new opportunity which Megatrend is bringing. With this, I would now like to hand over the call to Mr. Akash Minda to discuss the financial and the operational performance of the company during the quarter. Over to you, Akash.
Thank you very much, Mr. Minda, for your opening remarks. I would now like to refer to the presentation which is sent to the stock exchange and post online. I would like to start with the page number 3. Minda Corporation, about a quick overview about the Minda Corporation. Minda Corporation is a 32,570 million revenue company, having more than 16,000 people and having more than 33 plants in various locations across India and ASEAN. We have 7 partnerships: Stoneridge, Silka, Furukawa, AVQ Point, Pride Vision, Infact, and Vast. With Stoneridge, we have completed the financial transaction, but technological collaboration continues. Recent partnership with AVQ Point has helped us to win big orders in battery charger space in this quarter. I now move to the next slide, which is the highlights of Q3 for financial year FY22. The company has filed for application for the PLI scheme. We complete the transaction of Minda Stoneridge Instruments Limited. It will be now a wholly owned subsidiary from 1st of January 2022. The revenue from the quarter continues to outperform the industry performance. Improved double-digit EBITDA margin for the quarter on sequential basis despite lower automotive production. Total lifetime order book in Q3 FY22 is rupees 16,516 million. 4 more patents filed in this quarter, and YTD only in this year 14 patents. Total company now having 180 plus patents. Strengthening our EV order book by adding 2 new customers and lifetime order win of 1,294 million in Q3 FY22. In Q3 FY22, MCL revenue remained resilient at flat growth as industry degrew by 20%. EBITDA margin came at 10.7%, which is 10 basis points higher quarter on quarter. Order booking in this quarter continues to be strong, which shows customer trust on our core business along with the new advanced non-legacy products. I now move to the next slide, sharing about the transaction completed for making Minda Stoneridge as 100% subsidiary of Minda Corporation. It will now be called Minda Instruments Limited. The company has more than 400 crores of revenue, 1,300 people, 10 million plus clusters capacity and 21 million plus sensors capacity, more than 100 engineers and more than 16 patents filed. Stoneridge earlier had 49% and now Minda Corporation has acquired the remaining 49% as well. The transaction has been completed and line by line consolidation will happen from Q4. The steady financials with high ROC and will be value accretive from day one post acquisition. Minda Instruments Limited with a modular platform strategy being deployed to lower the cost and development time. Early engagement with customers for premium clusters and growing the sensors business. Localization of various sensors to aid profitability from FY24. Also trying to mitigate the semiconductor supply issues and its impact on the P&L. I now move to the next slide, which is slide number 6, an update on the electric vehicle opportunity. If I look at the right side, the potential EV kit value that Minda Corporation offers in its existing products is about 4,000 to 4,500. The increase in content from our business vertical mechatronics is about addition to about 2 to 3,000, and same in the information and connection system is about 2,000 to 2,500. The new products under development from our new EV division is about 8,000 to 10,000 rupees, totaling to about 16,000 to 20,000. For your information, in potential kit value, we have only included products for which we have confirmed orders. Products like motor controller and BMS are not included in the kit value. In this quarter, as Mr. Minda mentioned, we have added 2 new customers, Hero Electric and BMW, for our EV products such as battery chargers and DC-DC converters. Our customer base in EV is expanding, and whether new or incumbent OEMs, everybody is trusting, and we are proud to share that. Now moving to the next slide on the Q3 financial year 22 highlights and industry performance. Again, on the left side, the green players and the green customers mark the purely electric vehicle mobility customers. On the right side, by geography, in the first 9 months FY22, exports have grown by around 60%, and thus share of revenue from Europe and North America have grown to 10.4%. By end market, the first 9 months, commercial volume have outgrown the other segments, and that is why the share of revenue has increased from 20 to 21.9%. Passenger vehicle shares have also grown because of export. Moving to the next slide, looking at the automotive industry performance in Q3 FY22. If I see 9 months year-on-year, auto industry has grown by 9.3%. Two-wheeler has only grown by 4.4%, and others are on the left. If I look at the Q3 year-on-year performance, industry has degrown by about 20%, two-wheelers by approximately minus 22%, and passenger vehicles has grown down by 12.5%. The third wave of COVID has resulted in muted January, and whether the auto industry feels the pinch of that in coming months or not is something which we will have to closely monitor. For us, the focus remains on cost controlling the cost, improve productivity, and continue to outperform the industry numbers. Moving to the next slide on the consolidated performance for the Q3 FY22 and 9 months FY22. We would like to share the continued momentum of growth and outperforming both quarter-on-quarter and year-on-year. The company consolidated revenue stood at 738 crores and EBITDA at 10.7%. This is in line with our commitment of delivering consistent and improved performance. For the quarter, 738 crores at EBITDA at 78.7 crore and margin at 10.7%. PAT is also at 69.9 crores. Operation has outperformed the industry production numbers. Aftermarket has helped us in resilient business performance despite challenging macroeconomic scenario and semiconductor shortages. The EBITDA at 10.7% is delivered due to double-digit margin despite high commodity prices and adverse impact of semiconductor shortages across the industry. It is well supported by good growth in the aftermarket business, and company continues to implement several cost control measures for fixed cost. In this regard, the board of directors has declared an interim dividend of 15% on face value, that is 30 paisa per share. Aftermarket revenue in the quarter was 135 crores, which has grown 16% year-on-year and 6% quarter-on-quarter. Export revenue was 86 crores, which has grown by 25% year-on-year and 14% quarter-on-quarter. Our share of profit from JV companies from MSIL, from Minda Storage Instruments Limited, was 3.7 crore. VAS was almost flat, and Furukawa was negative 1 crore. Going to the next slide on our division-wise performance. If I look at the first division, which is mechatronics, aftermarket and others, on year-on-year basis, we did a 437 crores in Q3 FY21, whereas we have done 445 crores in this quarter. The EBITDA is 13% for this quarter. The mechatronics and aftermarket division, the revenue is stable as it is supported strongly by the fundamentals of resilient aftermarket and exports. Our EBITDA in this vertical has been at 13.0% due to favorable impact of higher aftermarket and various cost-cutting measures across the divisions. It is also adversely impacted by higher raw material prices and indirect impact on semiconductors. Mechatronics was impacted by lower two-wheeler sales of 22% year-on-year, but aftermarket grew by 16%, which resulted in 2% overall sales for the vertical. Commodity price rise, mainly on aluminium, zinc, and silicon, has impacted the vertical EBITDA margin, but cost control measures have helped us survive 13%. In the second division, which is information and connection systems, our revenue from 302 has come down to 293%, but EBITDA has gone up by 10 basis points from 7.1% to 7.2%. The segment was also impacted due to lower two-wheeler sales, but stable commercial vehicles production supported it. EBITDA at 7.2% is due to the favorable product mix, slight improvement in labor productivity, and tight control on fixed cost and stable copper prices also supported the EBITDA margin. Would like to also highlight our localization drive still continues and is in line with our plan. Moving to the next slide on the business performance in the order one. In the Q3 FY22, we have won orders worth 16,516 million. Out of this, export orders were 104 crores, and from EV players 116 crores in the lifetime order one. The new businesses is 616 crores and replacement business is 1,035 crores, which shows the strong customer confidence. If I look about the year to date, Minda Corporation has so far booked 4,231 crores order booked in lifetime, and about 258 from exports and 842 crores from the EV players. 2,362 crores is from the new businesses and 1,869 crores is from the replacement businesses. The Mechatronics has won 850 crores, out of which 60% is replacement and 40% is new. And for the entire ED is 2,164 crores. In the information and connected systems, for the Q3, the order one was 624 crores, 74% is replacement and 26% is new, which is majorly all wiring harness. In the plastics and interiors, we have won 66 crores worth of lifetime order book, 100% replacement business. And in other businesses is also about 111 crores, which is also two-wheeler business. New order businesses of 23,626 million also shows about the which is outperforming the industry growth. I would also like to highlight some key order wins from various customers in this quarter. From export market has awarded us for smart key businesses for large two-wheeler player. We've also won wiring harness business from a local large four-wheeler manufacturer in Vietnam. We've also won die casting housing businesses for export and domestic, battery charger businesses from leading two-wheeler Indian OEM, and DC-DC converters from export orders. Also, TREM 4, TREM 5 businesses and wiring harness businesses for the tractor industry. Moving to the last part of the presentation on the awards and recognition. While we continue to receive various awards, and thanks to our team and family members, one award I would like to really highlight is the Minda Corporation has received the ICSI's prestigious 6th annual award, CSR award in 2021, as in the emerging category. Thank you very much for placing our confidence in us. Looking forward for the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1. First question is from the line of Jay Kale from Elara Capital. Please go ahead.
Yeah, good evening. Thanks for taking my question, and congratulations on a decent set of numbers in a challenging environment. My first question, sir, was on their potential EV kit value. You've mentioned, you've given a breakdown on the increase in content for mechatronics, information connected and new product. I just wanted to clarify that, say a smart key solution type of a product, which is not necessary it's not an EV specific component, but is adopted by more of EVs. Which segment would that come in? Because we believe that had a higher kit value than maybe the 2,000 to 2,500 rupees content shown in the ICS division or even the mechatronics division.
Yeah, so this is primarily the smart keys and keyless entries coming in the mechatronics division. And again, I'm happy to share that over the last few quarters, we have won 28 platforms from more than 10 customers in keyless entry solutions, including EV and IC engine customers.
Okay, understood. So that 2,000 to 3,000 would largely entirely be the smart key solution in the mechatronics, right? Because I believe that was the kind of ASP that we were looking at for that.
That's right. Yes.
Understood. And if you could just throw some light on the new product under development, 8 to 10,000. You mentioned that BMS and motor controller is not in that. Where are we in terms of it's under development, but where are we in terms of the order wins, or how are we in terms of the ramp up of those products?
So Jay, these about 8 to 10,000 includes products like DC-DC converter, battery chargers, and of course various ranges that go in this. Again, I'm happy to share that over the last 9 months for these two products, if I may say, we have won orders from large OEMs, startup and large startups also in India primarily, and to the likes of TVS, BMW, Revolt, Ola, Hero Electric and others. So I would not be able to give what product against which, as I'm bound by confidentiality, but these are the businesses that we have won.
Perfect. Understood. And just on your Stonebridge acquisition, you also mentioned on the outlook side that you have access to a highly growing global market of clusters and sensors. If you can just elaborate a little more on how the opportunity size increases, how are you placed between now getting more orders from the passenger vehicle or two-wheeler side versus what a higher contribution of the CV side is, and how are you placed in terms of opportunity of future partnerships, if at all?
Yeah, so good question, Jay. Thank you again for that. So clusters is just to share with you, Minda Corporation started 6 decades ago from clusters. So we are building on that legacy and want to take that forward. And now with the change in the customer requirements as well as with the mega trends, the clusters is one and sensors is one of such products which are going to go through the premiumization and electronification route. If you currently see from the analog clusters, they are now moving to digital and then TFT, and then of course adding softwares and haptics and other styling aspects. So this is of course a 400 crore company, primarily catering to the two-wheeler and commercial vehicle segment. Going forward, we have already won orders, and you can already see in the market some of our products which are into the TFT clusters. For example, the new SD, the clusters that you see are from Minda Corporation. Similarly, we have production capacity to make these clusters for the Mahindra Thar. Also, the clusters are coming from Minda Corporation as a first passenger car product. We are now in discussion with various other customers in all segments, tractors, two-wheelers, commercial vehicles, passenger cars, to win opportunities in the advanced TFT clusters and moving from the clusters to cockpit solutions and driver information solutions at large with these various OEMs.
Adding to you, Akash, the TFT cluster, which is again the premiumization, like we mentioned in the smart key, we have moved from long time from mechanical to digital to TFT, and now we have we are also in discussion with customer to move from 5-inch TFT to 7-inch to 10-inch TFT. And that is going to be the more value addition in the company. And secondly, the sensors. There are various categories of the sensors are already under development, and we are also doing the localization, which will give us a benefit to capture more market.
Understood. Fair point. Just last one question, if I Ms. Prejan, on your financials, you've seen a decent performance on the margin side despite the headwinds of raw materials. While EBITDA margins increased quarter on quarter, but gross margins understandably have also come under pressure. How are we placed in terms of the price increases, in terms of commodities? Have we seen the last leg of commodity price increase, and how is the lead lag in terms of your cost increase versus the pass on to the OEM customers?
So, Jay, thank you very much. So again, like we've explained before, that we have a lag with our customers from 3 to 6 months basis, and we are all covered when it comes to our customers. But just to give you some more details, I'll ask Mr. Neeraj Mahajan to share with us, please.
Thank you. I think I would say at this point of time, the market is very challenging. from the customer side also, because they are not able to get the numbers what they would like to achieve. However, we are gradually moving from commodities which were in non-index section to the index one, so that recovery when we look at going forward would be given. So that is strengthening our recovery cycles today, and trust me, today organization is extremely focused to request customer in best possible ways for recovering these amounts. This is first point. Second, in terms of our discussions with the vendors also, we are looking at how we can consolidate the requirements in such a way that they do not come back to us seeking all the commodity increases to us, and we in turn can also be remain competitive, because end of the day, if we are asking the price increase and competitor is not asking it, you can understand I cannot improve the profitability for my program. So we are working on both the sides, and that is helping us to improve our bottom line. Thank you.
Understood. Thanks and all the best. I'll come back in the queue for more questions.
Thank you, Jay.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Ronak Sarda from Systematics. Please go ahead.
Hey, hi. Thanks for the opportunity. Hi, Akash. Quickly on the EV order book. The 850 odd crores top line, if you can help us understand how the overall numbers will start, flowing to the P&L. Let's say, where do we see 23, 24, how much of this order book will start, converting into production based on your estimates. One is that. And second, in the products like you highlighted, DC-DC converters, battery chargers, where do we, what would be our market share aspirations in some of these products?
Yeah, thanks, Ronak. So on the EV market front, for this year, if I look at the overall Minda Corporation, we'll be having a top line of about 20 to 25 crores coming from EV platforms. Going to the next year, of course, the market fluctuation will definitely come into play. But with a healthy order book of about 850 odd crores, we may see somewhere about 100 to 150 crores or more in the next financial year coming from the EV space. Of course, this is all subject to the market fluctuation and the uptake from the customers. And I would just like to again say that I've been highlighting that point for the last many calls also, that it all really depends on the customer uptake. But we have a strong order book with all the customers and all the segments. Coming to the DC-DC converter and battery chargers market share, we are working on this market share front, and we'll get back to you with the exact number of details. But each customer and a player has a different strategy when it comes to the import versus localization. So all I can assure you is that we are working with all and every customer in order to have a penetration with our EV components, and how we can get the localization benefits by offering Minda Corporation products.
Right. Thanks for that. The second question on the utilization level, specifically if I see the wiring harness division. So, if you can help us understand or, break it up into how the utilization level is, say, at the two-wheeler units and at the CV units. And is there a plan to correct, some of these capacities, given we have seen a very substantial cut in the, overall two-wheeler numbers? Also, how much of this, could be offset by new order wins, let's say, for EV wiring harness, or how are we, placed at the EV wiring harness industry?
Yeah. So, Ronak, if I look about the overall Minda Corporation, you may say that we are using our capacities up to, let's say, 65 to 70% at the moment. If I speak about the wiring harness division, it is somewhere again about 60 to 65%. In our security division is somewhere about 55 to 60%. While we increase our share of business from wiring harnesses in TVS, Ashok Leyland, and Hero, in the south plants that we basically have, this will help us, come to an optimum utilization level. And also when the EV wiring harness customers are going to kick in from the southern plants, it will help us utilize our facilities better.
Okay, sure. And any indication on how large would be the EV wiring harness piece as of now? And how is the industry structured right now? Are wiring harness still a lot of it being imported, or any idea on how the overall wiring harness piece is moving?
Yeah. So. Of course, wiring harness currently, has a maturity from the Chinese market. Of course, now the players like Minda Corporation, and our focus is to localize them. So, of course, we are now working with every two-wheeler OEM, EV OEM, in order to win their business. And we have already won businesses. Again, I may not name for all of them, but customers from the north as well as south in the EV OEMs, where we won 100% of businesses for wiring harnesses.
Sure. And the last question, again, you answered partly in the previous question itself, but if I look at the overall, the raw material to sales movement in the last, 6 to 7 quarters, we are, anywhere between 60 to 63% as such. So, should we assume, the majority of the RM pressure is behind us, and now we should start seeing some benefits of, the price increase when they come through, and the, efforts to help improve the margin profile?
So, Ronak, I think Mr. Mahajan had answered this question, both from the front-end customer side as well as our supplier side as well. So, we are taking various initiatives. Of course, the zinc, aluminium, silicon prices have increased quarter on quarter. Of course, copper has been stable from the last quarter to this quarter. But silicon, for example, has been, jumping very high. And some of them are indexed commodities and some of them are not. So we are again requesting our customers, in order to get the best recovery from them against all of them.
Sure. Great. Thanks a lot, and all the best.
Thank you, Ronak.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Congrats for this set of numbers in the challenging environment. Sir, during this quarter, the company has incurred around 327 million due to the revaluation of stake in the Minda Corporation. So, acquisition cost would be now around 192 crores because of adding this number.
So that's 161 crores, Abhishek. It's not 190.
So you have also done the revaluation during this quarter of 32 crores.
No, so that is, I ask our CFO to give the details, please, to help you understand better.
So the Abhishek, the revaluation which has come 32.7 crores is not a cost to us. Our stake, which was 51% stake, because the investment value of that has gone up by 32.7 crores. So our investment value has gone up, and that we have to book in our P&L. That's why, as an exceptional item, that has come into our P&L, and that will be reflected as a goodwill in the balance sheet. So that's not a cost.
Why it has deducted from the P&L?
It is a gain.
Why it has deducted from the P&L in this quarter, sir?
It's not deducted. It is added.
Okay. Sir, earlier interest cost and other income numbers used to be same, but this time there's a big gap. So there's a shortfall in other income. Is it because of the reduction in the cash and bank balance? So can you please update the net debt figure?
Yeah. So again, I'll ask the CFO to give the details. But again, the interest rate has fallen, and utilization of cash for vendor payment, and the payment charges for early redemption for fixed deposit for buying Stoneridge stake. But yeah, I'll ask the details to be given by Bikash, please.
The other income has fallen as the cash which is lying with us has fallen because we have utilized that cash to buy out the stake in Minda Stoneridge. And the FDs which were there, we have premature that FDs, so there were certain prepayment charges which has resulted the other income to fall. In terms of why the finance cost has gone quarter-on-quarter high, we used to get the EPC subvention of 3% because of, but from October onward, the government has not notified that subvention. That's why, as a conservative, we have booked that as a finance cost, and that's why the finance cost has increased by 1 crore in this quarter.
So, what is your current net debt figure, sir, in your books?
In our books, the net debt figure is around 58 crores.
Okay, it used to be at a higher side earlier, so it has gone down significantly. It is because of the acquisition of this business only, and plus that requirement of the working capital.
Two things. At the end of the financial year FY21, the net debt figure was minus 17 crores. Means we were having more cash than the debt. But now it has gone up by 58 crores because we have utilized 160 crores of cash. But the Stoneridge had 86 crores of cash with them. Because of that, and we have also generated free cash flow around 17 crores in 9 months. All this, if you add up, that's why the net debt figure has increased from minus 17 crores to 58 crores.
Okay, sir, got it. Sir, our current offering for the IC two-wheeler is around 4,000 to 6,000 and expected to see a 15 to 16,000 for the EVs. So just wanted to know how much current content per vehicle in EVs and what all other products are you going to add to reach at a 16,000 kind of the level?
So, Abhishek, in the chart shown, our current businesses are at the rate of about 4,000 to 6,000. And while we are working on the individual product portfolio, so when it comes to mechatronics, the smart keys and other product likes such as lightweighting and all is going to increase to about 2,000 to 3,000. And then in our other wiring harnesses and clusters and other spaces, it is going to increase by 2,000 to 2,500. This is also applicable for IC engines as well. When it comes to the premiumization and other electronification on the bikes, the remaining 8,000 to 10,000 on the newer product lines that come from the Green Mobility division, which is on the DC-DC converters, battery chargers. Also, we are including here some of the products that go into the commercial vehicle and buses space, such as the ITS and all.
So my last question is related with the financial details of the Minda Stoneridge for the 9-month FY22, like revenue, EBITDA, and PAT, and how is the product mix?
Yeah. So for the 9 months, when I speak about the MHIL or Minda Instruments Limited now, so we have done about 346 crores. EBITDA stands at 34 crores at 9.8%, and PAT is at about 18.7 crores. And again, here the focus is that, the EBITDA is also lower due to various challenges of raw material costs, semiconductor premium costs, and other raw material increases. But our focus here is again winning order businesses for new technology products from different customers and different segments. Modular platform synergy strategy being deployed to lower the cost and development time, so affordability and time to market, and early engagement with the customers for premium clusters and growth in sensors business, localization of products to improve the profitability as well, and try to mitigate the semiconductor supply and its impact on the P&L.
And how was the product mix in terms of the two-wheeler, four-wheeler, and series in the Minda Stoneridge?
So when it comes to Minda Stoneridge, about 60% is two-wheelers, and remaining is commercial vehicle and tractors right now. And for the four-wheelers, it is a very small number, but we are winning orders. The first is of course won by Mahindra Thar, and now we're looking at, and in advanced stages of discussion with customers for advanced TFT clusters for their products, passenger cars.
And how much is the localization in the Minda storage, sir?
Except for the semiconductors, everything else is localized. And of course, TFTs going forward will be imported from China, but rest it is locally produced. Some sensors are also being imported due to the current requirement, and we are working towards the localization of them.
So, sir, there is a big opportunity in the e-two-wheeler digital clusters. And as most of the e-two-wheelers are using digital clusters now, and the realization is also 8,000 to 10,000 rupees. In that case, how much big opportunity you are looking in this business, and what is your revenue target for the Minda storage for the next 2 years?
So Abhishek, a great question, but it includes some confidential information also. So I might not be able to share a lot of information, but as I can share with you that we are improving and working strong on our competencies, softwares, localization, platform approach in order to win these customers. And again, we are in various discussions at various stages to win customers. All these samples have been prepared.
Thank you, sir. That's all from my side.
Thank you.
Thank you. The next question is from the line of Chirag Shah from Edelweiss. Please go ahead.
Yeah, thank you very much. Apologies for repetition. The question has already been asked. One, Stoneridge revenue contribution in the quarter, if you can indicate. That was the first question. Because I think it's a part of consolidated numbers now, right?
No, that will be, they will come into consolidation from Q4.
From quarter, okay. So you indicated from January it got, okay. I heard it wrong then. Sorry for that. The second question is, in your order book breakup, the order book that you indicate for the EV, is it possible to break it down broadly between the new products and the old products? Like, what is the order book breakup between your traditional products like the locks and keys and wiring harness, and some of the new products like sensors and other things that you have been working on a broader basis?
So you may say that about 60 to 65% comes from the legacy businesses, and about 45% comes from the EV product lines, which is non-legacy at the moment.
Okay. Thank you for this. The second question was on sensors. So traditionally, if I understand correctly, we are working more on suit sensors as a primary area of focus. Is there any change over there? Have we expanded our product in the sensor category as such? If yes, can you shed some light on the opportunity size now versus what was earlier?
So I think that's a lot of details to share on the call. I mean, if you can speak to Bikash will be happy to share with you the details. But just to share with you, there are various types of sensors, when it's BS6 and TREM 4, TREM 5 coming in, and more importantly, the EV aspect. We are focusing on TPMS, thermal management sensors, other EV-related sensors. Again, it is internal strategy, and I won't be able to disclose. So on a one-on-one basis, if you really need details, I can get back to you.
Thank you very much. And if I can just squeeze in one more question, your utilization levels are still not optimum. So how should we look at margin trajectory from here? And also an update on your localization. You have an aspiration to localize the wiring harness piece. Where are we in that journey?
Yeah. So on the capacity utilization levels, of course, there is a possibility to win businesses and increase our revenue as well as profitability. But we are cautious on two aspects. Our FATR has to be really important, and secondly, while we reach to about 75 to 80% capacity utilizations, we look for maybe new plants and for de-risking purpose. And also expansion. So there are mixed strategies that come into effect. Coming to the profitability of the wiring harness through localization. Localization will help us improve the profitability by, let's say, 50 to 80 basis points in the next financial year. The labor productivity improvement should be about, again, 50 basis points. New businesses and increase in share of business, which should also help us, and the business mix from more commercial vehicles will also give us enhanced value. On the localization, I'm happy to share that the plan that we have prepared is already in execution phase, and we are well in line with our plan. And I think the results can be seen in our quarter-to-quarter numbers in wiring harness division.
Okay, so OEMs have now started looking at localization options in the wiring harness space, because earlier they were reluctant, and then COVID came across, so everything got postponed. So have those discussions have started happening now at an advanced stage? Is that a right assumption?
That's right, yes. Of course, the testing validation takes time. So while the discussions are going with some customers, and some customers have already approved it, but there are testing validations which have a long lead time, about 12 months or so, and that is when they come into production.
So effectively, H2 onwards, we can see some improvement. Is it the right assumption, or it's more about F24 onwards that we'll see the impact?
It will be gradual, quarter on quarter.
Okay, good. Thank you. Thank you very much.
Thank you.
Thank you. The next question is from the line of Jay Kale from Elara Capital. Please go ahead.
Yeah, thanks for taking my question again. So 2 questions. First, on the lock set side, would you have gained any market share, because you all seem to have outperformed the industry? Of course, that is also a function of mix and CV contribution. But specifically on the lock sets and die casting division, would you have gained market share, if you can disclose, and approximately how much, and how do you see that going forward in FY23 and 24? And my second question is, the PLI, you mentioned that you all have bid for that. I mean, you all plan to bid for that. But if you can throw some light on which are the components that you would want to go aggressively on the PLI side, because there are a lot of components on the advanced automotive component side, which you all are, currently producing as well. Which are the key focus areas amongst those components which you all think that you all have a right to win and bid aggressively?
Yeah, thanks, Jay. When it comes to the market share, when it comes to the keyless solutions, I think nobody is there in the market. When it comes to the locking systems, which is mechanical lock, it is becoming more and more of commodity, and which is in the overall locking space, we have grown from about 35% to north of 40% over the last few quarters, and you'll see further gains with our actions in the future as well. When we speak about the PLI scheme, we have already applied on the 9th of January, and of course, most of our products are complying in the PLI scheme. There are about 16 products across 14 technologies, like again smart keys, immobilizers, convert DC to EV products, ADAS solutions, and other products as well. So there are some products that we've also requested and done some requests to the authorities to include as well.
Understood. Is it fair to assume that you would now be the largest player in mechanical lock sets in India with 40% plus market share?
I'll request Mr. Minda to give that answer, to give confidence to all of you that our endeavor is to be the market leader. We are so, but I request Mr. Minda to add some light on that, please.
See, the most important is where we make more margin. So now, as Akash mentioned, although we have that market share, but we have to see the technological shift, and so that we increase our margin. So mechanical lock, yes, we have all the competency, we are there, but when it has become more commodity, so we are not giving that focus, and we are seeing how to convert all the OEMs to the smart key and the new technology. We are doing continuous efforts how to make it more affordable to the customer, and simultaneously we should get more margin in comparison of the mechanical pieces.
Understood. Okay, thanks a lot.
Thank you.
Thank you. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Thanks for taking my question, sir. During this quarter, there's a 4% quarter-on-quarter drop in the two-wheelers revenue, while the industry grew around 20%. So what was the reason, sir, of outperformance?
So, Abhishek, if I understand, this was you're asking the reason for the industry degrowth, or you're asking the reason for our numbers?
Reason for your outperformance, sir.
Right. So there are various initiatives that we have taken over the last few quarters and few years. Of course, while I've mentioned earlier on strengthening our core and customer engagement and technology have been the pillars in order to drive our performance. So enhancing the core in the operational aspects, whether it is partnerships, improving working capital, strengthening the management, improving the wiring harness market share as well as profitability on the technology and digitization across various launching new products and engaging better in the case and mega trends. And lastly and most importantly, the customer centricity while winning new products and new customers in all our product lines, increasing kit value. Share of business increase has been a key focus for us to outperform, as well as the premiumization of our products. And to add, aftermarket has really given us the growth along with the exports.
What was the product mix from the wiring harness business for the last 9 months FY22 plus CVs and PVs?
So I would suggest, I would rather say that about 55 to 60% or more so has been on the two-wheeler space. Recent in the last quarter, commercial vehicle has started picking up. So that I would say about 20 to 25%. And again, tractors is also about 15%. PVs and others, come to about all put together 20%.
So, have you won any new business in the wiring harness, especially in the PV side?
In the PV side?
Yeah. Passenger vehicle side?
Yes. So, as I mentioned, we have one business in Vietnam from our local, one of the largest local four-wheeler manufacturers in Vietnam. And also in India, we are in development stages with a couple of customers in advanced discussion stages with them as well.
And what is the quantum of that business, sir?
I'll have to just check, Bikash, if you could just get back to them.
I'll get back to you, Abhishek, on that.
Okay. Next question is related with this your ASEAN business. So how is the growth in the ASEAN business, especially from the Indonesia and the Vietnam, in the two-wheeler?
So ASEAN business is, it's a different strategy and different animal. When I come to the overall two-wheeler market, really depends on the country. But the opportunities from exports from Indonesia and Vietnam are looking to grow. Where all the companies are trying to adopt in China plus one strategy. But definitely our focus is to do in more and more order win when it comes to our existing customers as well as new customers and see how we can export from there. So this is what our interest and focus is in order to first win the local businesses and then grow forward and adding more and more products from India to our locations in ASEAN.
Okay. And sir, in aluminium die casting business, how was the performance for the 9 month FY22 versus 9 month FY21? And what was the contribution of domestic versus export?
So when we speak about our die casting, one second please. Yeah, so when we speak on our die casting revenue, quarter 3 last year was about 128 crores and quarter 3 this year also has been about 128 crores also. And if I speak about the profitability has come down again due to our customer indexation and silicon prices for the export customers, and it is a lag that we are looking at, and plus the semiconductor issues that is looking at. But of course, this is going to come back very soon once the global passenger car market picks up and our customer starts inverting the material. When we come to about the 9-month die casting, so in the last year we did about 275 crores. In this year, 9 months, we have done about 375 crores. And if I speak about the profitability, the EBITDA numbers have gone from 45 crores to 54 crores in the last 9 months.
So as the capacity utilization has reached to the 75 to 80% in the die casting business, so are you looking for further Capex in this business?
So the current level of capacity utilization is not 70 to 80%. It is somewhere about, again, 65 to 70%. But definitely each customer has their own requirements, and hence we have to commit to them in terms of the Capex. So while we win new businesses, we have to look at this investment strategically.
Okay, sir. And my last question is your overall Capex for the FY22, and what is your plan for the FY23?
So I'll ask Sanjay Gupta to just share his numbers on the Capex front. However, the overall FY22, in the overall YTD is about 72 crores in terms of the Capex, and overall you may say in the full year we're looking at about 100 odd crores in this year, and the same number is expected to be from the similar numbers are expected to be in the next year.
So this is including the PLI investment, or it is excluding PLI?
So this is excluding PLI.
And what can we expect for the PLI investment for FY23?
So in FY23 we are looking at about again 70 odd crore. One second. So about 4 to 5% of the revenue when it comes to the PLI scheme on the investment perspective.
So most probably that your Capex will cross the 200 crores for the next financial year.
No, not the next financial year. Over the next 2 years.
Okay. Thank you, sir. That's all from my side.
Thank you. The next question is from the line of Shashank Kanoria from ICICI Securities. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, I just want to have a broader sense over the next 2-3 years, what kind of top line and profitability are you seeing? So, as you alluded to initial participants that you are operating at 65% utilization levels. So, something like 5,000 crores of top line possible for us in FY24? Is it a fair assumption given that we have done good amount of new orders?
Yeah, so again, our first endeavor, Shashank, is to outperform the industry performance. So if the industry goes flat, our endeavor is to grow at least 10 to 15% higher than the industry. There are various initiatives that we are looking at. One is, of course, in terms of the order book, customer engagement, building our strong product portfolio, looking at the four-wheeler as well as exports and aftermarket are some of the areas which will help us give us the growth and outperform the industry. When we look at the overall EBITDA numbers, of course, our most important is consistency and sustainable delivery of the profitability, and then gradually go and increase our profitability quarter on quarter and year on year. In about midterm to let's say about 2 to 3 years, we would like to go to about 12 to 13% is what we are looking at.
Okay. But any business about the revenue?
Sorry?
So maybe in 3 years, any vision statement on the revenues front? Maybe in 3 years, 5 years, you want to become a 5,000 crore company or 10,000 crore company, anything of that sort?
So our endeavor is to outperform. We are in the midst of working on our long-term plans, and we'll come back shortly on that.
Okay. And so secondly, there have been some production issues in one of the market units in the EV front of yours, Ola Electric. So just wanted to get a sense, what is the production run rate that you're receiving from them at this point of time, and a ramp-up schedule, if anything you can share?
Sorry, Shashank, I will not be able to answer that question due to confidentiality reasons with our customers.
Sure. But sir, we do remain the sole key solution supplier to them, right?
Yes, absolutely. 100% share of business.
And sir, what's our role in Hero Electric?
Sorry?
And what's our role in Hero Electric? So what components are you supplying to them?
Hero Electric, we have we now looking at these battery chargers, and there are other engagements that are ongoing for all our other product lines.
Yes. Thank you so much, and wish you all the best.
Thank you.
Mr. Kanodia, does that answer your question?
Yeah. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question for today. On behalf of KR Choksey Research and Minda Corporation Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.